And as we've seen, the market has even managed to rally in the absence of rate cuts because tech has been one of the leading drivers there, and specifically in AI. Do you see that continuing when it comes to the surge in technology stocks?
A very large portion of the year-to-date rally is attributed to tech and, of course, stocks that have a flavor of artificial intelligence or AI in them. And I'm actually very okay with that. Technology stocks have lived up to their lofty expectations. Not every other sector in the S&P has done so. And at the same time, as costs and inflation and other pressures that these businesses have experienced over the last few years, as those continue to alleviate, their profitability is going to continue to soar. So there is a lot of momentum around tech right now. And if you're not invested in growth, there's a good chance you could be missing out on some of this momentum.
And in terms of looking under the hood on the S&P 500, we are still seeing quite weak market breadth. Do you expect that we'll get some kind of more rotation, or that there'll be more participants in the rally?
Not necessarily. I think growth, as I mentioned, with technology is certainly going to be a key driver here. If you look at the second quarter, 5 of the 11 sectors in the S&P ended negatively. That's not that's not indicative of a very broad type rally. And besides telecommunications, communication services, and tech, the ones that have done well are very defensive in nature. It's almost like the parts of the market that are doing well are technology, and the parts that are getting investors a little bit wary about a slowdown. So for that reason, I don't think it's a smart idea to not stay diversified and stay balanced, but I do think overweighting to growth and participating in this, what could be a once in a lifetime opportunity for technological growth, is important.
And I have to ask you about Nvidia, the poster child of AI, and it briefly became the world's most valuable company. Is this something that you see sort of continuing in the market? I mean, what is it really saying? Is it just some healthy retracement maybe we've seen, or do you think that this could actually be suggesting a fragile market?
Well, Nvidia is certainly the poster child. Jensen Huang, the CEO, called this the next industrial revolution. It took 23 trading days to put $1 trillion of market cap, making them the most expensive company in the world. Now they're hovering around third. They surpassed Apple and Microsoft. The GPUs, the graphic processing units that they create, are second to none. Their ability to process simultaneously very, very vast data sets, it's unparalleled, it's unheard of, and it's really driving and changing the way that we work, live, and operate. There were some signs of exuberance more recently. It took 3 days for Nvidia to shed over $500 million. And just to put that into perspective, there's only 15 companies in the S&P 500 that are even worth $500 million or more. So these are behemoth-like numbers, but I think this rally can and will continue behind Nvidia. Analysts still love the stock, and not to offer our viewers out there of any buy recommendations, but I think paying attention to what's happening in artificial intelligence is very important for your portfolio.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance. It is not a guarantee.